And similarly, as I mentioned, Dr. Reddy also looks very, very strong to me. So Lupin and Dr. Reddy are two buys when it comes to pharma.
Got it, Rudra. Let's welcome Mr. Sunil Subramaniam with us. Market veteran is now with us. A warm welcome and good morning to you, sir. Thank you so much for taking the time out. I'm sure you would be assessing each and every statement, rebuttal after rebuttal on the Hindenburg research report that came in late on Saturday evening and the entire Sunday. Tell us, how are you looking at the market reaction? Did you expect a mature reaction to this Hindenburg research report of the markets and the Adani Group stocks as well?
So if you look at the market, I think whatever it's showing now, I think it's about 0.5% down. I think up to a 2 to 3% impact can be anticipated. And the reason for that is there are mature, we talked about mature, there are mature players like the insurance companies, the mutual funds and AIFs and PMFs. There are retail investors who tend to react. And also there are people who take stock positions versus mutual funds which take diversified positions. So given the fact that this incident occurred on Saturday night and has given people time to think about it, I think there are some people who are on the cautious note who would say if they are sitting on good profits to book profits today, right? But that being said, I don't think the market will go much lower for 2-3 reasons. One is, I think there's been an immediate counter by the SEBI chairperson, 1 and 2 followed. I think there's been good clarity around what is one. Second is, I think one has to understand that Hindenburg itself, they first tweeted that there's an India thing coming and then they came out with the report. So before that tweet, their action would have been to short the market and they would have probably advised, see, Hindenburg is a research advisory firm, they would have advised their customers to short. So today, if you see, some of those customers could cover those shorts, right, to make profits. And so I think that it would be a healthy balance. And my eyes would be on good quality stocks which are correcting a little bit versus those which had risen up a lot and probably can fall a lot. So it's not that you should go rush in and buy that which has fallen more. But if you're keeping your eye on the fundamentals of stocks and saying there is a correction because of an unrelated event. But end of it, let's accept that whatever happens to this whole shenanigan that's happening with Hindenburg, nothing affects the quality of India's growth, the quality of the earnings, the future of our stock market. So I think these are all blips, and hence overall, I would say you should buy today good quality stocks and good quality sectors.
Namaste, Sunil ji. What a pleasure to have you, sir. And very warm welcome. Now you are in your new avatar and you can talk on stocks. Over the last 5 years that we have interacted, you have kept your views limited to the improving macro and of course a very good sectoral view and view on the markets, but not individual stocks. It is a distinct pleasure to welcome you, sir, and I hope you become a regular on Business Today, sir. I just want to understand now, where are you deploying your own personal money and where do you think lies value in a market which is sort of doing pretty well as far as indices are concerned?
So I think that if you see the situation of the market today, a lot of the good news on the Indian economy front is in the price. Okay, one has to broadly accept that. And so from a perspective of the larger cap indices, I think we are trading just about a long-term average. But on a broader market, we are slightly higher than that due to the rally in the mid and small caps. So my focus would be on accumulating good large caps in that space. That's my first priority, because I think it hasn't got the attention that it should have, because the retail flows, the 23,000 crore SIP book, is still largely weighted towards the mid and small cap space. So domestic fund managers are, I wouldn't say forced, but have no choice but to buy mid and small cap because the flows are coming in those spaces, right? So I think adequate flows have not been coming into the larger cap spectrum, and FII flows have been very iffy, right? They're coming in strongly, going out strongly, and that's the action in the large cap. So first of all, before I get into sectors and maybe stocks, I would say that my weightage is towards a large cap or a larger mid cap kind of a space because that's where I believe there is some amount of value creation yet that can happen given the growth story. That's number one. Number two, when it comes to sectors, again, since I said, see, the basic thing is that one has to be a consistent contrarian in a time when liquidity is ample. I think that's the philosophy that I follow. So to that extent, why I'm saying this is money chases growth, and especially the retail segment, they look at past returns, whether it's of mutual funds or of stocks running up, and take tips from influencers and everybody and go and buy that which is rising, right? So if during the time when you're assured of liquidity, right, if you stick to a consistent contrarian, and to that extent, then I come to what sector that I think that my weights would be around the consumption basket. And the reason for that, let me delineate a little bit. It's because India has seen a K-shaped recovery. So you've seen high-end houses, high-end cars, a high-end segment of the population post-COVID has grabbed all the benefits. The bottom of the pyramid, the mass market consumption hasn't bounced back post-COVID to the extent it should have. I see that leveling out and coming out, and so I think that the consumption space in a broader, whether it's discretionary or staples, or even within housing, within auto, I would say that's the space where I think that the K-shaped recovery will now start into a U and then in a V gradually as Indian economy moves forward. And I think that's where the value creation has not been fully priced in. I'm not saying they're cheap, I'm saying they're not fully priced in. So that would be one bet. The second would be the banking and financial services space. And the reasons for that, let me again go a little bit deeper. See, I know there's been a lot of pressure and talk around the fact that deposit growth is not catching up with the credit growth. So the NIMs of banks, how will they perform? They are in a very sweet spot on the NPA cycle. Are they going to rise? I think in all of this, one thing which you've got to remember, and this is where for me this is going to be a good pick, is the fact that it's largely been a retail lending, retail financial services story which had taken up the bank earnings and growth. Now we are going through the phase where, with RBI and SEBI all conveying concerns around the retail phenomenon, right, of excessive lending going there and everything. I think there's been a little bit of a softening of the optimism around the banking space there, and which is fair given the retail part. But what I'm saying is that I see the green shoots of private capex starting. Now, the capex stories of those private capex have already been built into the infra space and the cap goods space and the defense space and the manufacturing space. But the fact that when that really picks up steam, which I think over the next 12, 18 months is a good bet, I think that the banks which have to finance it, and at that time, the NIMs will not be under pressure because the small and medium sector lending which banks do in the capital goods suppliers is not interest rate resistant. They have to complete their projects and they will borrow at whatever price. So bank NIMs, they should, though the deposit growth is not catching up with the lending growth, their NIMs should hold up because they will be able to lend to this segment at fairly profitable margins. So I think that we are going to see that trend reversal. I think NIMs will start to gradually go up. Loan books will go up. So absolute EPS, which is a function of price into quantity, right? Your margins into value should see. So I see that the banking space has not got the attention in the market. So coming from a slightly contrarian position, I am looking to accumulate good quality banks.
Good quality banks. So we'll keep an eye out on all these banks right there. Coming back to you, Sunil sir, so stay with us. Rudra, coming back to you, just to take a view on how the markets first 15-20 minutes have shaped up for you. Where are you looking at strength and where are you looking at weaknesses emerge?
Sakshi, morning also when I gave my call, I was saying one can look at buying ONGC, and at current market price, both fundamentally on valuation terms, you have comfort. Also, you have on chart, there is lot of support at around 300, 310 zone. So at current market price, it's a very good buy. So ONGC can be bought even at current market price, looking at targets of around 375, 400 to come on ONGC. And I also had a buy call on IEX. IEX also looks very, very strong to me. At around 195, it's a good buy. Looking at targets of around 235, 240 to come on IEX with a stop loss of around 187. So ONGC is a buy, IEX is a buy at current market price. And I also concur with my co-guest there that yes, private banks are also looking very attractive to me even on chart. two stocks which I can pick from private banks are one ICICI Bank at current market price of around 1,150, 1,160. It's a good buy. And also one can look at HDFC Bank at current market price of around 1,650. So for me, HDFC Bank and ICICI Bank from private bank looks very good. If you want mid cap ONGC and IEX, which I have now spoken about, and if you want to pick sector wise few more themes, yes, I agree with Shail that you have good stocks to pick from pharma and FMCG. And when it comes to pharma, I like Biocon, I like Lupin, I like Dr. Reddy. So these are few stocks from pharma you can look at going long. And all these are stocks which are available in F&O also. And if you want to pick few stocks from FMCG, yes, for me, Hindustan Unilever, ITC looks very, very strong. So these are few sectors and stocks where you have comfort even at current market price, both on chart as well as fundamentally there is valuation comfort.
Fair point. A couple of stocks I want to mark, starting with the chemical sector. There's been a strong outperformance coming in from Excel Industries. Remember, it came up with a stunning set of numbers which saw net profit surge from I think 5-6 crore rupees in the quarter year ago to about 40 crores. The stock is up double digits, and similarly you see a strong move coming in on Lakshmi Chemicals. This is now trading at 278. So keep these two stocks in view. The market is pretty much now stable. The Nifty down 92 points, 24,276. The knee-jerk reaction has now been absorbed by the markets. We will now wait for Europe to open somewhere between 1 p.m. to 12:30 p.m. to see if there is any fresh selling pressure that Adani stocks will witness from overseas players. But for the moment, it is fairly even Stevens. Remember, the cement giants Ambuja and ACC weren't impacted at all when it came to the pre-open settling. Adani Wilmar is doing pretty well, just 3.5% lower. And the energy space within the Adani group, which actually showed the real pain, down 20% in the first pre-open session, is now down between 3 and 4%. So that's how markets are reacting, and reacting fairly positively as far as the crisis is concerned. Let's get back to Rudra. Rudra, your top pick in the railway space. There seems to be some momentum, some mojo on the long side that's coming back.
See, Shailendra, if I have to pick up from railway, valuation is definitely a concern. In fact, not now. Last time, even when I was in your show, I was saying in general, both railway and even for that matter, defense, shipping, these are areas where I will definitely look at profit booking. And I was very clear. I said, if you want to stay with PSUs as a theme, then look at stocks like Coal India, look at ONGC, and you have to be in only those areas where we have some valuation comfort, or even look at Power Grid for that matter. So Coal India, Power Grid, ONGC, NTPC. So these are few areas where I might still be in terms of PSUs, or even look at PSU banking for that matter. Punjab National Bank at around 150 is a mouth-watering buy. And for me, even SBI now post its results and correction to levels closer to 800, 810 offers a great valuation comfort. And if you hold these stocks in your portfolio for next 1 to 2 years, you will definitely make money. And names like SBI, PNB, Coal India, ONGC, NTPC, I have valuation comfort. But I will strictly avoid, again I am repeating, use this up move to book some profits or get out of stocks which are from the railway themes, or even for that matter defense, or even from shipping for that matter. And entering fresh at current market price is a definite no-no. But if you already have it, and if you want to ride the move, and if you want to still continue staying with these railway stocks or shipping stock or defense stocks, then you might consider that. But fresh entry at current market price for railway, shipping and defense is a big no. And if you want to stay in PSU, look at PSU banks and look at few stocks which I spoke now from PSU, and be very stock specific there, keeping in mind valuation.
Let's get Mr. Subramaniam back into the conversation. You did talk about banks and private banks at that. But looking at the reaction that Adani Group stocks have given today, would you be also a buyer in some of the stocks? Where do you find value within the entire group?
I think that it's important to look at the underlying businesses, and to me, the cement business is a very strong one, and I think the ports business. So I think those two would be where the fundamental business is good, and any correction is a buying opportunity.
Okay. And beyond the Adani Group, where else, and beyond the banking space, where else do you find value? You know, Rudra was talking about railway stocks, defense stocks right there. These have been the runaway sectors, the PSU stocks largely. Do you think a large part of the value is now over and one should probably look other way, or are you still hoping to get some value within this space?
So it all depends on two things. So one is your return expectations and your time frame involved. I think if you're expecting 30-40% CAGR, those days are over. I think if you're more reasonable at a kind of a low double-digit growth and you have a 3 to 5 year time frame, I think these spaces still have it. But what happens is that when you see 30-40% and then you get 10-12%, you say, "Arey yaar, this has not lived up to it." So I think it's clear to have that very, very clear in your mind, because ultimately these stocks are playing off the India growth story. As I said, it's in the price. So the future growth now is a normative growth, which should be around the nominal GDP growth of the country. So I think the value discovery has happened, but the value creation in terms of aligning with the India's nominal GDP growth, that money is still there to be made if you have patience and your return expectations are aligned to the nominal GDP.
Right. Coming to you, Sunilji, we haven't interacted much over the last 2 years or so, at a time when defense has exploded as a sector of deep value creation, and of course one of the finest momentum plays. How do you
Correct.
see this space post this recent correction that we've seen in Hindustan Aeronautics, Garden Reach in particular, and of course the flowering of private sector defense space in the listed markets? Any favorites in this space?
I would say that see, what's happened there is that a few fund houses have raised large sums of money in these sectoral themes which can allocate to that, and that surge of liquidity has taken this up. So I don't think that's a sudden discovery of India's defense potential, it's a part of the Make in India theme, it's a part of the PLI process, and it's a part of the fact that PSUs have a very strong space there. So all this value creation, and then fund houses choosing to specifically launch sectoral themes around defense and everything, that's contributed to this rise, right? So my previous answer holds good for this. I think the value creation, that is the surprise element, has happened. Now you will see a normative growth. So I'm not saying that they are definitely valued higher than much in the past. So if you go by a historic valuation, they are looking expensive, but that doesn't mean that they will not deliver returns. So I would say probably the right way to put it is, don't go and fresh accumulate. What you already hold, I think you can continue to hold.
Okay, ladies and gentlemen, I need to mark the Nifty for a very particular reason, and that's at 24,240. If you look at the daily chart of the Nifty, it has touched upon a very important support level, which is, one second, let me just get back to you. 2430 is a bounce back area. Let us see how it goes. But 127 points lower at 24,240. Nothing much to be worried about, but the sell off, the mild profit booking that you are seeing on the Nifty was because Friday the index has surged up dramatically, and of course, as I have mentioned, that this is a truncated week, so option sellers are a little more cagey, and they are trying to get the best out of what is a 4 session weekly expiry. Rudramurthy, sir, your view on Lakshmi Organic Chemicals, 282 and doing pretty well.
Yeah, see, for me, this has been one stock for a long time. It has just been consolidating, and then, yes, after a session of consolidation, today you can even see that it is closing and giving that breakout above levels of 280. And even there is support of volumes when it comes to this price action. So I will be a buyer in Lakshmi Organic. And assuming today it closes above 280, which is the breakout zone, yes, this stock can go back and test levels closer to 330, 350 zone. So at current market price, yes, a buy. Keep a stop loss of around 265. Look at targets of around 325, 330 to come on Lakshmi Organic Chemical.
Okay. Mr. Subramaniam, getting you into the conversation, you know, just right after the budget, the narrative was being built that the markets may now increasingly turn defensive. Stocks within the FMCG, the pharma pack, they may start to perform, and one needs to now hedge their positions with some of these stocks and staples as well. How would you look at these pockets? Do you think there is enough merit in this narrative?
Yes, I do agree. In fact, like I said, it's good time to be slightly contrarian. And while you should always keep an eye that there is no deep value in India, and that India itself is a growth market, as a growth space. So where the growth is not yet priced in. So I would look at what is called as the PEG, right? The price earnings linked to the growth. So there, if you see that way, right, I still think that a slightly contrarian stance to stories which are broadly going to benefit from India's growth, but have not been fully priced in because their current earnings, they are not the flavor of the month, right? Is a smarter strategy at this point in time if you want to get additional returns compared to buying that which has already run up a lot. So I agree that it's a rebalancing time and in the markets.
So what kind of stocks within these pockets would you be looking at, sir?
So to me, like I said, for me, mass consumption, right? So within the auto space, I would say two-wheelers as a important play. I would say tractors again, because with the monsoon numbers coming in, that's a good tactical play. I would again, within the banks, yes, good quality private sector banks have suffered. So that's a value play. At the same time, I think I agree with Rudra in terms of the few public sector banks, because if you see in the fight for deposits, they have higher CASA balances, they have a better reach, and I see that the re-emergence of rural demand is a key theme that I think will play, and PSU banks are ideally positioned to benefit from that. A very, very interesting point I would say is RBI governor talked about food inflation, and we talk about food inflation negatively because it's not helping RBI to cut rates, and the narrative. But just remember one thing. If food inflation is hurting the common urban consumer, it's benefiting the agri owner of those, right? So the inflation benefits the rural population dependent on agriculture. So a little more money there would probably drive consumption. So as a filter, I think anything rural related, consumption related, I would expect it to deliver greater value. And so that would be a key theme in my mind at this point in time.
9:56, ladies and gentlemen, we'll start wrapping a part of the show at 24,227. The Nifty is actually checking and testing its weekly pivot level. Remember, this is a very, very strong support which should hold, but only time will tell. But for the moment, down 144 on the Nifty. The Nifty Bank slipping 300 lower, and the IT index down 164. The Nifty 500 is also 0.5% lower. What else looks exciting in the market is the sensible and mature reaction that the market has shown on the Adani issue between Hindenburg and SEBI, as also 361, the wealth manager that had launched that offshore fund. Yes, there is a red tick. Yes, there is selling pressure, but it seems to be sensible. Now Adani Enterprises is actually down 5% at 3,026. Adani Ports down 3% at 1484. What is doing pretty well as a theme, the entire railway space from the PSU sector. Parts of defense are clicking in the green, and of course earnings have been reported very well. Look at PNC Infra, 5% higher. Look at Lakshmi Organic Chemicals, 4.8% higher. A strong move that is also coming in other stocks which are market favorites, such as HUDCO, reclaiming 300, 2.7% higher. CDSL again back in the green, 2.5% higher, 2630. And of course it's the metal space that is on the earnings limelight today. You will have numbers coming in from NALCO, NMDC and Hindustan Copper. Remember, these three stocks have been beaten black and blue over the last 3 months or so, and any outperformance or expectation of better earnings and those being fructifying, you will see a massive uptick. Sunil ji, before we let you go, sir, your final view on the internet space, which is now flourishing for stock pickers such as you. A very quick comment, please.
A quick comment is it's high growth, high risk, and so definitely you should play it, but you play it with diversification, because which is going to be the winner is hard to predict. So put your bets on a few, spread it across the space, and even one winner will make up for the non-performance of the non-winners. So I think to stay diversified within that space, don't ignore it, is going to be the key part of India's growth story.
Mr. Subramaniam, do you have a view on Ola Electric IPO and the newly listed stock?
I think, see, it's I would rather look at IPOs a few months after they list, because the hype and the euphoria and everything means that all the good news is factored in. So I think that the company is good, the outlook for the sector is good, everything is good. But I think the price at which I buy would be something after the storm and the dust settles. Wait for the reality to come in and then step in. And if you see all these sexy IPOs of the past few year and a half, you would have been much better if you waited and then entered these companies. So I think that's my view even on this one.
Okay, Rudra, we'll take your quick view before we let you go, and that will be on the chemical space again, that Shell also highlighted for you. Stocks like Aarti Industries, are you still looking at those?
Yeah, last time even when we spoke about Aarti Industry and Navin Fluoro, but yes, at current market price, Aarti Industry is a buy, or might be a better level to buy is closer to its strong support at around 710. So post the data, you have this 710 as a strong support. So closer to this 710 zone, you can definitely look at buying Aarti Industry. Keep a stop loss of around 680 and look at targets of around 780, 800 to come on Aarti Industry. But don't buy at current market price. Wait for that dip zone and enter at levels closer to that 700 to 710 on Aarti Industry.
Okay.
Ladies and gentlemen, thank you so much, Rudra, for joining us. Very kind of you. And we look forward to strong moves on ONGC and IEX in particular. Those were the picks that you had mentioned. Very kind of you to offer us your views on the Adani Group as well. Thank you so much. Sunilji, thank you once again. Very kind of you to again come back into circulation in a very different avatar, and we look forward to continued views coming in from your end as far as the markets are concerned. And of course we would love to host you if you are ever in Delhi to our studios in Noida, sir.
Happy to do that. Thank you. All the best, Shelly, to you. Thank you. Thank you, ma'am. Thank you. Thank you.
We are now, ladies and gentlemen, waiting for Mr. J.